Imagine sitting in a quiet corner of a coffee house. The soft hum of conversations fills the air. The smell of freshly brewed coffee lingers around you. You are relaxed, thoughtful, and free from the rush of the outside world. Now imagine that this calm space becomes the way you handle your money too. That is the vision behind the Coffeehouse Investor. Bill Schultheis begins with a simple idea. Most people make investing far too complicated. They chase quick profits, follow loud experts, and constantly check their phones for market updates. But deep down, this endless chase creates only stress and confusion. The truth, Bill says, is that wealth does not come from knowing everything. It comes from knowing enough and doing it consistently. The financial world often feels like a noisy storm. Everyone claims to know the next big thing. But the Coffeehouse approach teaches us something different. It invites us to step out of the noise and return to simplicity. Instead of trying to beat the market, we learn to work with it. Instead of chasing more, we focus on enough. The goal is not to build a fortune overnight, but to create peace of mind for a lifetime. The Coffeehouse Investor does not try to predict tomorrow. It trusts the power of time, patience, and steady habits. It reminds us that a simple plan, followed with discipline, will always beat a complicated one built on fear. In this book, you will discover how to invest with calm confidence. You will learn to save wisely, diversify your money, and ignore the noise of Wall Street. You will see that you do not need luck, genius, or constant trading to become financially free. What you need is clarity, courage, and consistency. Bill's message is not just about investing, it is about living. Because when your finances are simple and stable, your mind becomes free to enjoy the moments that truly matter. Family, friends, purpose, peace. That is the Coffeehouse life. So take a deep breath, sit back, and let us begin the journey into a philosophy that blends wisdom, simplicity, and financial freedom. Because the secret to wealth is not hidden in Wall Street offices. It is waiting for you here, in the quiet comfort of the Coffeehouse. Now, let us step into part 1, the Coffeehouse philosophy, where you will meet the true spirit of the Coffeehouse Investor and learn how simplicity can transform your financial life forever. Part 1, the Coffeehouse philosophy. There is a moment in every investor's life when they realize that more information does not mean more success. It only means more noise. The modern world of money is filled with charts, predictions, and endless voices telling you what to do. But the truth, as Bill Schultheis reminds us, is far simpler. You do not need to chase the crowd to find financial peace. You need to create your own quiet space within it. That is the beginning of the Coffeehouse philosophy. This part of the book opens the door to a new way of thinking. It invites you to slow down, breathe, and see investing not as a race, but as a rhythm. Just like conversations shared over coffee, true wealth grows best in calmness. It grows when we stop trying to control everything and start trusting simple principles that stand the test of time. At the heart of this philosophy are 3 timeless ideas. First, spend less than you earn and save the rest with purpose. Second, spread your money across different types of investments so that no single mistake can destroy your peace. And third, stay patient long enough for time to reward your discipline. These ideas may sound simple, but their power lies in their consistency. When you live by them, investing becomes less of a gamble and more of a graceful routine. Bill often compares his philosophy to sitting in a friendly coffee house. In that place, there are no shouting brokers or blinking screens. There are people talking about life, dreams, and meaning. You listen, you reflect, you learn. And just as a cup of coffee brings warmth and focus, this philosophy brings balance and clarity to your financial life. The Coffeehouse philosophy teaches that real freedom comes when money stops controlling you. It is not about being rich beyond imagination. It is about being rich in time, calmness, and confidence. When you are no longer chasing every market trend, you finally have the space to chase your purpose. You start living intentionally, without the constant background noise of fear and greed. So before diving into strategies or portfolios, Bill asks you to first understand the mindset. Because the greatest transformation does not happen in your bank account. It happens in your attitude. When you shift from complexity to simplicity, from panic to patience, You become the kind of investor who sleeps peacefully at night. The Coffeehouse philosophy is not built on secret formulas. It is built on timeless wisdom. It tells you that the market will do what it always does: rise, fall, and rise again. But your job is not to predict those moves. Your job is to stay steady while others lose balance. That steadiness becomes your advantage. This part of the journey is about learning to think differently. It is about creating a personal belief system that can stand strong when the world shakes. Bill's approach transforms investing from a source of anxiety into a source of strength. He wants you to see that your best investment tool is not a chart or a report. It is your mindset. As you listen ahead, imagine yourself walking into that coffee house. You can hear gentle music, calm laughter, and the clinking of cups. You take a seat, and Bill begins to share the story of how this entire philosophy began. It all started with one simple idea that changed the way people looked at money forever. Now let us step into the next chapter. A chapter that defines the heart and soul of this journey. Let us meet the Coffeehouse Investor. Chapter 1. The Coffeehouse Investor. Every movement begins with a small realization. For Bill Schultheis, that realization came when he noticed how most investors were living in quiet confusion. They were surrounded by endless advice, financial channels, and complicated products. Everyone wanted to beat the market, but very few actually did. What most people gained instead was stress, not success. Bill saw that this chaos came from one simple problem. People believed investing had to be hard. They thought only experts could do it right. But what if the truth was the exact opposite? What if simplicity, not complexity, was the secret to long-term success? That question gave birth to the Coffeehouse Investor. A philosophy built not on predictions or secrets, but on peace of mind. Bill imagined an investor who could enjoy life while quietly letting wealth grow in the background. No screens flashing red and green. No panic when the market dropped. Just calm, steady progress. He wanted to show people that the smartest investors are not those who trade the most. They are the ones who trust time and discipline more than luck. He compared it to sitting in a coffee house. You sip your drink slowly. You enjoy the aroma, the warmth, and the company. You are not rushing anywhere. You are present. That is exactly how investing should feel. Peaceful, focused, unhurried. The Coffeehouse Investor is not chasing the market. He is living his life while the market works quietly for him. This mindset came from years of observation. Bill had watched clients who made fortune after fortune on paper, only to lose it in panic. He saw others who ignored the noise and simply saved regularly in index funds. Those quiet investors never made headlines, but they retired comfortably. They did not panic. They did not guess. They just stayed the course. So the Coffeehouse Investor became a symbol of wisdom and calmness in a noisy world. He believes that you do not need to predict what will happen next. You just need to accept what you can control. How much you save, where you invest, and how long you stay invested. Everything else is background noise. Bill's message is deeply human. He reminds us that investing is not about numbers on a screen. It is about emotions, patience, and trust. When you stop chasing quick profits, you start gaining real freedom. When you stop fearing market drops, you start seeing them as opportunities. The Coffeehouse Investor's strength is his stillness. He stays calm when others run. Over time, this calm approach builds something far more valuable than money. It builds confidence. It builds time. It builds a life where financial decisions feel effortless because they are rooted in clarity. The Coffeehouse Investor knows that the market will rise and fall, but he also knows that his long-term discipline will always win in the end. Bill's philosophy is not about predicting the future. It is about preparing for it. It is not about getting rich quickly. It is about staying rich quietly. And it begins with one small choice: to believe that simplicity works. This first chapter is a gentle awakening. It invites you to put down the endless search for the perfect stock and instead pick up a cup of calmness. Because once you understand that wealth grows best in peace, not panic, everything changes. Now that you have met the Coffeehouse Investor, it is time to understand the next step. How can you actually create a plan as simple and powerful as his philosophy? For that, we move into the next chapter. Chapter 2. The Simplest Investment Plan. Simplicity is the true power of investing. Bill Schultheis begins this chapter by reminding us that most people overthink their financial lives. They study endless stock reports, follow multiple newsletters, and switch investments based on fear or hype. In the process, they lose more than they gain. The simplest plans, however, often produce the best results. The Coffeehouse Investor does not seek to beat the market with clever moves. He seeks to ride the market steadily, quietly, and consistently. The goal is not to predict the next big trend or the next top-performing stock. The goal is to invest in broad slices of the economy and allow time to grow wealth naturally. Simplicity becomes a shield against emotional mistakes. Bill introduces a few guiding principles for this simple plan. First, save regularly. Even modest amounts, invested consistently, compound over time to create significant wealth. Second, choose investments that cover the entire market. This is where index funds shine. Rather than guessing which company will succeed, you own a little of everything. The market itself decides winners and losers, while your portfolio grows steadily. Another key principle is minimizing costs. High fees and frequent trading can quietly eat away at your returns. Even a small percentage lost every year can compound into thousands of dollars over decades. The simplest plan avoids unnecessary fees and keeps investing as low maintenance as possible. Automation is your friend. Set up regular transfers and contributions, and let them happen without constant attention. Bill emphasizes that simplicity does not mean passivity. It means thoughtful action without obsession. You actively choose a few well-diversified funds, contribute consistently, and review occasionally. Beyond that, you do not let daily market fluctuations dictate your mood or decisions. The market will rise and fall. Your role is not to predict these movements, but to remain steady while they happen. The chapter also addresses common fears. Many people hesitate to invest because they fear losing money. Bill reassures us that temporary declines are normal. Time and diversification protect you from permanent loss. By keeping your plan simple, you avoid panic reactions that can destroy long-term progress. Ultimately, the simplest investment plan is more than a strategy. It is a mindset. It is the belief that wealth grows from patience, discipline, and clarity. You do not need to be brilliant. You need to be consistent. You do not need to know the future. You need to follow a plan that can withstand uncertainty. As this chapter closes, you begin to see the Coffeehouse philosophy in action. Investing is no longer about stress or constant decisions. It becomes an intentional, calm, and reliable part of your life. And once you embrace this simplicity, the next step is learning how to handle the noise of the outside world. How to ignore the endless opinions, headlines, and predictions that tempt you to deviate from your plan. For that, we move to the next chapter. Chapter 3. Ignoring Wall Street. The world of finance is loud. Every day, news channels scream about market highs and lows. Websites flash predictions and hot tips. Experts debate which stock will rise and which will fall. For most people, this constant noise creates stress, confusion, and bad decisions. Bill Schultheis calls this the trap of Wall Street. It is a place where fear and greed dominate. The more you listen to it, the more your emotions control your money. And the more your emotions control your money, the less likely you are to succeed. The Coffeehouse Investor learns to step back from this chaos. Ignoring Wall Street does not mean ignoring the market. It means ignoring the distractions that do not matter. You do not need to know every prediction, every rumor, or every daily move. Your focus should be on the long-term plan you created in the simplest investment chapter. By tuning out the noise, you protect your discipline. Bill explains that constant attention to market news is dangerous, It tempts you to act impulsively. When markets fall, fear urges you to sell. When markets rise, greed tempts you to buy more. Both reactions can harm your portfolio. The true investor knows that daily swings are irrelevant to long-term success. Patience and consistency are far more valuable than speed or cleverness. The coffeehouse approach encourages a calmer perspective. Imagine sitting in a quiet coffeehouse. People talk around you, but you are not pulled into every conversation. You focus on your own cup of coffee, enjoying the moment. That is exactly how you should approach investing. Enjoy life. Stay calm. Let the market do its work in the background. Bill also emphasizes the importance of ignoring opinions. Financial experts often disagree. One predicts a crash, another predicts a boom. Listening to both can confuse even the smartest investor. The Coffeehouse Investor chooses a few guiding principles and sticks with them, no matter what headlines shout. This chapter is about building resilience. When you ignore Wall Street noise, your mind becomes clearer. You begin to see the value of simplicity. You realize that wealth grows from steady habits, not frantic reactions. You learn that emotional control is more important than market knowledge. As you move forward, you are ready for the next step. Building a portfolio that matches this philosophy. A portfolio that is balanced, diversified, and low cost. That is what the next part of the book will guide you through. We step into part 2, Building Your Portfolio, where you will learn the practical ways to apply the coffeehouse mindset to real investments. Part 2, Building Your Portfolio. Part 2 of this journey shifts from philosophy to action. Now that you understand the mindset of the Coffeehouse Investor, it is time to see how to put that mindset into practice. Thinking simply is one thing. Doing simply is another. This is where the plan becomes real. In the first part, you learned to embrace calmness, patience, and clarity. You learned to ignore noise and trust in steady habits. Now, you will learn how to translate those habits into a portfolio that works for you. A portfolio is simply a tool. It is not magic. It is a reflection of your discipline, patience, and priorities. Building a portfolio can feel intimidating at first. There are stocks, bonds, funds, and countless choices. But Bill shows that the process does not need to be overwhelming. The coffeehouse approach reduces complexity to a few guiding principles. It emphasizes diversification, low cost, and simplicity. It focuses on the things you can control, not the things you cannot. In this part, you will learn how to divide your money among different types of investments. You will see why asset allocation matters more than picking individual winners. You will discover how to choose funds that match your goals and risk tolerance. You will learn the importance of occasional rebalancing and avoiding common mistakes that trap most investors. This part also reminds you to maintain the mindset from part 1. Even the best portfolio can fail if you let emotions take over. Discipline, patience, and calm are still your most powerful tools. Investing is not about reacting to daily changes. It is about creating a system that works while you live your life. As you step into this practical phase, imagine your portfolio as a garden. You plant the seeds carefully. You water them steadily. You protect them from weeds and pests. You do not dig them up every day. You let nature and time do their work. That is the essence of the coffeehouse method. The next chapter begins with the foundation of this garden: asset allocation. How you divide your investments will determine the growth, stability, and resilience of your portfolio. Understanding this key principle is the first step toward building a financial life that is simple, secure, and stress-free. Let us now explore asset allocation, the key to success. Chapter 4: Asset Allocation, the key to success. Every investor faces the same question: how should I divide my money? Bill Schultheis calls this decision asset allocation, and he considers it the most important choice you will ever make. Asset allocation is not about picking the best stock or fund. It is about deciding how much of your money belongs in different types of investments. The right mix can protect you in bad times and grow your wealth steadily in good times. At its simplest, a portfolio has 3 main categories: stocks, bonds, and cash. Stocks bring growth. They tend to rise over the long term, but can be volatile in the short term. Bonds bring stability. They provide regular income and protect your portfolio when stocks fall. Cash brings flexibility. It allows you to cover expenses or seize opportunities without selling other investments in panic. Bill emphasizes that the right allocation depends on your goals, your timeline, and your comfort with risk. A younger investor saving for decades may favor more stocks for growth. Someone nearing retirement may favor bonds for stability. But regardless of age, the principle remains the same: balance. Too much risk can create fear. Too little growth can leave you short of your goals. One of the key lessons in this chapter is that asset allocation matters more than selecting individual funds. Even the best stock picks cannot overcome a poorly balanced portfolio. Diversification spreads risk across different types of investments. It reduces the impact of any single loss. It allows your portfolio to weather storms and continue growing quietly over time. Bill also highlights the importance of simplicity in allocation. You do not need dozens of funds or complex strategies. A few broad-based funds that cover the stock and bond markets are enough. Complexity rarely leads to better results. Consistency and discipline are far more powerful. Another important idea is that asset allocation is not static. Over time, some investments will grow faster than others. Your mix may shift without you noticing. That is why periodic review and rebalancing are essential. Returning to your original allocation ensures your risk remains in check and your portfolio stays aligned with your goals. Asset allocation also frees you from emotional decisions. When your portfolio is balanced, you are less likely to panic during market drops or chase bubbles during rapid growth. You can focus on living your life while your investments work quietly in the background. This is the essence of the Coffeehouse philosophy applied in practice. By the end of this chapter, you understand that the division of your portfolio is not just a technical choice. It reflects your priorities, your comfort with risk, and your commitment to long-term discipline. A well-allocated portfolio becomes the foundation of your financial peace. It is the first practical step in turning the Coffeehouse philosophy into action. The next chapter will guide you through choosing funds that actually work. How to select simple, low-cost investments that grow steadily over time without requiring constant attention. That is where the real mechanics of building your portfolio begin. Let us now explore choosing funds that work. Chapter 5. Choosing funds that work. Once your asset allocation is set, the next step is choosing the investments that will fill each category. Bill Schultheis emphasizes that the Coffeehouse Investor does not chase the latest hot stock or trendy mutual fund. Instead, the focus is on simplicity, low cost, and broad diversification. This is where index funds become the hero of your portfolio. Index funds are designed to match the market, not beat it. They invest in a wide variety of companies, spreading your risk and capturing overall growth. Because they do not require active management, their fees are much lower than most mutual funds. High fees quietly erode returns over time, so keeping costs low is one of the smartest decisions you can make. Bill also explains that too many choices can be overwhelming. Most investors do better with a few carefully selected funds rather than dozens of options. For stocks, consider a fund that covers the total stock market or a broad international index. For bonds, a fund that includes government and corporate bonds provides stability. The idea is not to guess which fund will perform best, but to own a piece of the entire market. Another important point is simplicity in management. A portfolio of 2 or 3 funds can be far more effective than one with 20. It is easier to maintain, less stressful, and still fully diversified. Complexity often tempts investors to trade more frequently, which reduces returns. The Coffeehouse approach avoids this trap. Bill reminds us that selecting funds is not a one-time task. You should review them occasionally to ensure they still match your goals and allocation. But frequent changes based on short-term performance or headlines are harmful. Investing is a long-term journey, and your choices should reflect that perspective. The chapter also highlights the psychological benefits of simple, reliable funds. When you know your money is in solid, low-cost investments, You are less likely to panic during market swings. Confidence comes from understanding that your portfolio is designed to grow steadily over decades, not from reacting to daily news. This emotional stability is as important as financial performance. Bill provides guidance for different levels of comfort and risk tolerance. Conservative investors may focus more on bonds and large-cap stocks. Moderate investors can include a balance of domestic and international stocks. Aggressive investors may tilt slightly more toward growth stocks, but still within a disciplined framework. No matter the choice, the principle remains the same: simplicity, low cost, and broad exposure. By the end of this chapter, you understand that choosing funds is not about finding a secret winner. It is about creating a portfolio that mirrors the economy, minimizes costs, and supports your long-term goals. The Coffeehouse Investor does not gamble. He invests wisely and quietly, letting the market work for him over time. The next chapter will guide you on rebalancing your portfolio. How to maintain the balance between growth, stability, and risk as your investments evolve. Let us now explore rebalancing your portfolio. Chapter 6. Rebalancing your portfolio. Investing is not a set-and-forget activity. Even the most disciplined portfolio can drift over time. Some investments grow faster than others. Stocks may surge while bonds lag. Cash may sit idle as other assets rise. This changes the balance of your portfolio, sometimes in ways you do not notice. Bill Schultheis calls this the quiet risk of ignoring rebalancing. Rebalancing is simply the act of restoring your portfolio to its original allocation. It is not complicated. It is not about predicting the market. It is about keeping your risk in check. When stocks rise faster than bonds, you sell a small portion of the stocks and add to bonds to return to your target balance. When stocks fall, you may buy more to maintain that allocation. In doing so, you are following the timeless rule of investing: buy low, sell high. Bill emphasizes that rebalancing is a discipline, not a reaction. You do it on a regular schedule, perhaps once or twice a year, not in response to daily market news. This prevents emotional decisions that often harm investors. It forces you to sell what has grown too large and buy what has become temporarily undervalued. Over time, this small act of discipline compounds into meaningful advantages. Another important point is that rebalancing reduces anxiety. When you know your portfolio is balanced, you do not fear market swings as much. You have a plan. You have a system. You trust that your investments will grow steadily over time. That peace of mind is at the heart of the Coffeehouse approach. Bill also notes that rebalancing is flexible. You do not need to be perfect. If one asset is slightly off, it is not a problem. The goal is to maintain a reasonable balance, not perfection. This mindset removes the pressure and keeps investing simple. Rebalancing also reinforces your long-term strategy. It reminds you that investing is a marathon, not a sprint. It prevents greed from taking over during market highs and fear during market lows. Each time you rebalance, you strengthen your portfolio and your confidence. By the end of this chapter, it is clear that rebalancing is not optional for the Coffeehouse Investor. It is a quiet, disciplined act that ensures your portfolio remains aligned with your goals. It is a tool that transforms simple allocation into a resilient, long-term wealth-building system. The next chapter will focus on avoiding common mistakes. Even with a great plan and disciplined rebalancing, investors can fall into traps that undo years of progress. Understanding these pitfalls is the final step in building a portfolio that works quietly and effectively. Let us now explore avoiding common mistakes. Chapter 7. Avoiding common mistakes. Even the most disciplined investor can stumble. Bill Schultheis emphasizes that mistakes are often subtle. They do not come from bold gambles alone. They come from small, repeated behaviors that quietly erode wealth over time. Understanding these pitfalls is essential for the Coffeehouse Investor. One of the most common mistakes is chasing performance. Investors often move their money into the hottest stock or fund, believing they can capture the next big gain. The result is usually stress and regret. Markets are unpredictable. Yesterday's winner may be tomorrow's disappointment. Chasing returns turns investing into gambling, not disciplined wealth building. Another mistake is ignoring costs. High management fees, trading commissions, and hidden expenses quietly eat away at your returns. Even a small percentage lost every year compounds over decades into thousands of dollars. The Coffeehouse Investor focuses on low-cost, broad-based funds to minimize these losses. Timing the market is also a trap. Many investors try to buy low and sell high. Few succeed consistently. Bill reminds us that the market cannot be predicted. Attempting to time it often leads to selling in panic during downturns or buying at peaks out of greed. Consistency and patience are far more reliable than timing. Emotions are another dangerous influence. Fear can cause premature selling. Greed can push excessive risk-taking. Both can destroy years of disciplined investing. The Coffeehouse approach teaches emotional control, reminding us that calm consistency beats reactive decisions. Neglecting diversification is another frequent error. Putting too much money into one stock, one sector, or one fund increases risk. A balanced portfolio spreads risk and smooths out inevitable market ups and downs. Diversification is not optional. It is protection. Overcomplicating the portfolio is also a mistake. Some investors add dozens of funds, trying to optimize every fraction of return. Complexity increases confusion, costs, and the temptation to trade frequently. Simplicity, paired with discipline, produces far better long-term results. Another subtle error is neglecting regular reviews. Even simple, well-chosen portfolios require occasional attention. Assets grow at different rates. Your allocation can drift without rebalancing. Periodic review ensures alignment with your goals and maintains risk at manageable levels. Finally, Bill warns against ignoring your own financial needs and lifestyle. Investing is not just about money. It is about creating a life of freedom, security, and purpose. Chasing returns while neglecting your happiness or financial priorities defeats the purpose of investing. By avoiding these common mistakes, the Coffeehouse Investor maintains clarity, discipline, and calm. Mistakes are not eliminated entirely, but they are minimized. With patience, low-cost funds, proper allocation, and emotional control, long-term success becomes far more likely. This chapter closes part 2 of the book. You now understand the practical steps to build and maintain a portfolio that works quietly and effectively. The next part focuses on staying the course. Even the best portfolio will face market volatility, and the key is learning how to remain patient and disciplined. Let us now step into part 3, staying the course. Part 3, staying the course. Part 3 shifts the focus from building a portfolio to maintaining it. Creating a plan is one thing. Following it through years of market ups and downs is another. Many investors start strong, but falter when emotions, fear, or greed take over. This part is about learning how to remain steady, calm, and disciplined no matter what the market does. The Coffeehouse Investor knows that time is the most powerful tool in investing. Markets will rise and fall. They will be unpredictable, sometimes frightening. But your long-term success depends not on predicting these movements, but on staying the course. Patience is your ally. Consistency is your shield. Bill Schultheis emphasizes that emotional control is just as important as financial strategy. Without it, even the best portfolio can fail. When fear causes panic selling, or greed pushes excessive risk, years of careful planning can be undone in days. Staying the course requires a mindset built on calmness, trust in your plan, and confidence in the long-term power of disciplined investing. This part will explore 3 key lessons. First, the importance of patience. Second, how to keep emotions in check. Third, practical ways to remain consistent even during periods of volatility. Together, these lessons transform a simple portfolio into a resilient, long-term wealth-building system. The Coffeehouse philosophy is not about reacting to every market headline. It is about trusting the system you have built. It is about knowing that your allocation, your low-cost funds, and your discipline will work quietly over time. It is about freeing your mind from worry and letting your money grow in the background. As you step into this part of the book, Imagine the calmness of the coffeehouse again. Even as the world outside rages with noise and chaos, you are steady. You sip your coffee, you reflect, you trust the process. That is what staying the course truly means. The next chapter begins with the first and most important lesson of this part: patience. How to embrace time as your greatest ally and let your investments grow steadily without interference. Let us now explore the importance of patience. Chapter 8. The importance of patience. Patience is the cornerstone of long-term investing. Bill Schultheis begins this chapter by reminding us that the market will always test your resolve. There will be periods of rapid growth, sudden declines, and seemingly endless uncertainty. For many investors, the temptation is to react, to sell in fear, to buy in greed. But the Coffeehouse Investor knows that patience is far more powerful than reaction. Time is the ultimate ally. Even modest, regular investments grow significantly over decades through the magic of compounding. This growth cannot be rushed. It cannot be forced. It must be allowed to unfold naturally. Bill emphasizes that impatience is costly. Trying to speed up results through frequent trading, speculation, or chasing trends often destroys more wealth than it creates. The chapter also explores the emotional challenges of patience. Watching your portfolio fluctuate can be uncomfortable. Seeing others make quick gains can create envy or doubt. The natural impulse is to act, but acting without strategy is the fastest route to mistakes. Patience requires trust in your plan and confidence in your choices. Bill provides practical advice for cultivating patience. First, set clear, long-term goals. When you know why you are investing, short-term noise becomes less intimidating. Second, remind yourself of the market's history. Markets have always recovered from downturns over time. Third, automate your investments. Regular contributions continue without your daily intervention, reinforcing the habit of patience. Another key lesson is the power of perspective. A single market drop does not define your portfolio. A few months of gains or losses do not determine your long-term wealth. Patience allows you to see beyond the daily fluctuations and focus on the decades ahead. This long-term view transforms fear into calm and uncertainty into confidence. Bill also highlights the connection between patience and simplicity. The simpler your plan, the easier it is to follow patiently. Complex strategies, frequent trades, or constant monitoring increase stress and tempt impulsive actions. By keeping your portfolio simple, you make patience natural. It becomes less of a challenge and more of a habit. The chapter concludes with a reminder that patience is not passive. It is an active choice to trust your plan and act only when necessary. Every contribution, every rebalance, every disciplined decision reinforces the power of time. Through patience, small consistent actions become the foundation of long-term financial success. Having embraced patience, the Coffeehouse Investor is now ready to tackle another critical skill: emotional control. Because even the most patient investor can falter when fear or greed enters the mind. The next chapter will explore keeping emotions in check, teaching you how to remain calm, confident, and disciplined through every market cycle. Chapter 9. Keeping emotions in check. Investing is as much about psychology as it is about numbers. Bill Schultheis begins this chapter by reminding us that emotions are the silent drivers of most financial mistakes. Fear can cause panic selling during market downturns. Greed can push excessive risk-taking during periods of rapid growth. Even the most carefully constructed portfolio can be damaged if emotions take control. The Coffeehouse Investor recognizes that emotional discipline is a skill, not a trait. It can be developed, practiced, and strengthened over time. The first step is awareness. Pay attention to how market fluctuations make you feel. Notice the urge to act impulsively. Awareness alone can prevent many poor decisions. Bill emphasizes the importance of perspective. Short-term market movements are rarely significant to long-term wealth. A temporary decline does not mean permanent loss. A sudden rise does not guarantee long-term gain. When emotions flare, remind yourself of your goals, your allocation, and your time horizon. This perspective keeps fear and greed in check. Another practical strategy is to remove triggers of emotional decision-making. Turn off constant market news. Avoid daily checking of portfolio balances. Limit exposure to financial chatter that provokes anxiety or overconfidence. By creating a calm environment, you reduce the chances of acting impulsively. Bill also teaches that rules and structure support emotional control. Automating investments and rebalancing on a schedule removes the temptation to react emotionally. Having a written plan to follow during market volatility provides clarity and confidence. The Coffeehouse Investor does not guess or follow the crowd. He relies on principles, not impulses. Managing emotions also requires self-compassion. Mistakes may happen. Losses may occur. Instead of blaming yourself, focus on learning and returning to disciplined habits. Emotional resilience grows from patience, practice, and reflection. The chapter highlights the connection between emotions and long-term success. Calm, disciplined investors consistently outperform those who chase trends or react to fear. Emotional control is not about suppressing feelings. It is about aligning actions with principles, not impulses. It is about making decisions from reason and perspective, not panic or euphoria. By mastering emotional control, the Coffeehouse Investor strengthens the foundation built in previous chapters. Patience, discipline, and simplicity now work together with emotional steadiness. This combination prepares you for inevitable market volatility, allowing you to stay on course without stress or regret. The next chapter will focus on navigating market ups and downs. Even with patience and emotional control, markets will fluctuate. Learning how to respond, or more accurately, not respond to these swings is essential. Let us now explore staying the course through volatility. Chapter 10. Staying the course. Through volatility. Markets are never calm forever. Bill Schultheis begins this chapter by reminding us that ups and downs are normal, inevitable, and even necessary. Volatility can feel unsettling, but it does not have to derail your financial journey. The Coffeehouse Investor knows that staying the course during turbulence is a test of patience, discipline, and emotional control. Volatility can be frightening because it challenges your expectations. One day, your portfolio may grow. The next, it may shrink. The natural instinct is to react, to sell in fear, or buy in greed. But the Coffeehouse philosophy turns this instinct on its head. Instead of reacting, you observe, trust your plan, and maintain perspective. Bill emphasizes that volatility is actually an opportunity. When markets fall, you can rebalance and buy more at lower prices. When markets rise, you sell some of the appreciated assets to maintain balance. This disciplined approach allows you to use volatility to your advantage, rather than letting it harm your progress. The chapter highlights that the Coffeehouse Investor focuses on what is controllable. You cannot control market swings. You cannot predict the next crash or boom. What you can control is your allocation, your contribution schedule, and your rebalancing habits. By concentrating on these factors, you remain steady even when the market feels chaotic. Bill also teaches that emotional preparation is key. Expect volatility. Accept it as part of the investing journey. Mentally rehearsing market downturns reduces fear when they actually happen. Instead of panic, you respond with calm, measured actions that align with your long-term plan. Another strategy is to maintain a long-term perspective. Short-term declines may feel dramatic, but over decades, they are minor blips. Historical data shows that markets recover, grow, and reward consistent, disciplined investors. Keeping this perspective allows you to view volatility not as a threat, but as a natural rhythm of investing. Bill cautions against seeking safety in excessive cash or ultra-conservative investments out of fear. Doing so may protect you temporarily, but it also reduces long-term growth potential. The Coffeehouse Investor balances risk with patience, understanding that modest short-term declines are worth the reward of long-term gains. By the end of this chapter, you understand that volatility is not a signal to abandon your strategy. It is a reminder that investing requires calm, discipline, and a long-term mindset. The Coffeehouse Investor does not react to noise. He stays the course, confident that his plan, grounded in simplicity and patience, will prevail over time. The next part shifts focus from investing to living. Part 4 explores how the principles of the Coffeehouse Investor apply to daily life, personal fulfillment, and the real measure of success. Let us now step into Part 4, the Coffeehouse Life. Part 4, the Coffeehouse Life. Part 4 shifts the focus from money to life. By now, you have learned the philosophy of simplicity, how to build a portfolio, and how to stay the course through market ups and downs. This part is about applying those principles to your daily life. Investing is not just a path to wealth. It is a path to freedom, peace of mind, and a life lived intentionally. Bill Schultheis emphasizes that financial success is only valuable if it serves your life. A well-managed portfolio allows you to live without constant worry. It allows you to focus on what truly matters: relationships, personal growth, experiences, and fulfillment. The Coffeehouse approach is about balance, not obsession. This part explores two main ideas. First, how to live rich and stress-free. Second, how to measure true success beyond money. It encourages you to reflect on your values, your goals, and what brings meaning to your life. Investing wisely supports your life rather than dominating it. Bill reminds us that the principles of simplicity, patience, and discipline apply beyond finances. In relationships, work, and personal growth, clarity and consistency create better outcomes. Stress often comes from overcomplication, impatience, and emotional reaction. The same practices that make your portfolio grow quietly can also make your life calmer, more intentional, and more fulfilling. As you move through this part, you begin to see the full picture. Investing is not an end in itself. It is a tool to support a rich and meaningful life. The goal is freedom from fear, freedom from stress, and freedom to focus on what matters most. The next chapter begins with the practical and philosophical steps to living rich and stress-free. How to align your financial habits with your life goals and create a lifestyle that brings peace, confidence, and satisfaction. Let us now explore living rich and stress-free. Chapter 11. Living rich and stress-free. Financial freedom is more than numbers in an account. Bill Schultheis begins this chapter by reminding us that the Coffeehouse Investor seeks a life free from constant worry. Living rich is not about extravagance. It is about having enough, knowing your priorities, and aligning your spending with your values. It is about freedom, choice, and peace of mind. The first principle of living stress-free is simplicity. Simplify your finances. Automate contributions. Use low-cost, broadly diversified funds. Remove complexity and unnecessary decisions. When your financial life is simple, it requires less attention, less worry, and less emotional energy. Another principle is intentionality. Every financial decision should support your life goals. Do you spend money to impress others, or to create experiences and security you value? Intentional choices reduce stress and create a sense of control. Money becomes a tool, not a burden. Bill also emphasizes the importance of patience in life, just as in investing. You do not need instant results. Small, consistent habits compound into meaningful progress over time. This perspective transforms daily decisions from pressure-filled moments into opportunities to act wisely and confidently. Emotional control plays a vital role in living stress-free. Fear, envy, and greed can make even the simplest financial plan feel overwhelming. By managing emotions, you prevent panic, regret, and impulsive spending. Calm decision-making extends beyond investing. It improves relationships, career choices, and personal fulfillment. Another key idea is focusing on what you can control. You cannot control the market, other people, or unexpected events. You can control your habits, your allocation, and your mindset. Concentrating on what is controllable reduces stress and enhances confidence. It turns uncertainty into manageable challenges rather than paralyzing fear. Bill encourages reflection on life priorities. True wealth is measured by time, freedom, and fulfillment, not by comparison to others. A simple portfolio supports your lifestyle, enabling you to pursue passions, help others, and enjoy experiences that matter. Stress-free living comes from aligning your resources with your personal values rather than chasing societal definitions of success. Finally, living rich requires gratitude. Appreciating what you have fosters contentment and reduces unnecessary desire. It complements financial discipline and patience, reinforcing a mindset that is calm, confident, and long-term oriented. By the end of this chapter, you understand that financial success and personal peace are intertwined. A well-designed portfolio provides security and freedom, but true richness comes from how you live with it. The next chapter explores the real measure of success, helping you reflect on the deeper meaning of wealth, achievement, and fulfillment in life. Chapter 12. The real measure of success. Success is often misunderstood. Bill Schultheis begins this chapter by reminding us that true success is not measured by wealth alone. It is not about how many zeros are in your bank account or how many possessions you accumulate. The Coffeehouse Investor defines success by freedom, balance, and fulfillment. It is about living intentionally, making wise choices, and experiencing life fully. One of the first measures of success is financial security. Having a well-structured, low-stress portfolio allows you to meet your needs and pursue your goals. It prevents worry about bills, emergencies, or unexpected events. Financial security provides a foundation for a life free from constant anxiety. Another measure of success is time. Time to spend with loved ones. Time to explore passions. Time to grow personally and professionally. Money is valuable not for its own sake, but for the freedom it provides to use your time meaningfully. The Coffeehouse approach emphasizes creating a life where your money works for you, not the other way around. Bill also highlights balance as a critical indicator of success. Life is not only about investing or working, it is about relationships, health, personal growth, and contribution. A successful investor ensures that wealth does not dominate life, but supports balance. Stress-free management of finances allows attention to what truly matters. Intentionality is another hallmark of success. Every decision, financial or otherwise, should align with your values and goals. Living without a plan often results in wasted effort, stress, and regret. Success comes from clarity, focus, and consistent action. By aligning your choices with your priorities, you create a life of purpose and meaning. Emotional control also defines success. Reacting impulsively to fear, greed, or societal pressure undermines both financial and personal goals. The Coffeehouse Investor maintains calm in uncertainty, patience in growth, and consistency in action. This emotional resilience is a sign of true mastery and long-term success. Finally, contribution and fulfillment are essential measures. Helping others, supporting your community, and leaving a positive legacy bring satisfaction that money alone cannot provide. True success is felt internally, not displayed externally. It is about living with intention, gratitude, and alignment between resources and values. By the end of this chapter, you understand that wealth is a tool, not a goal. The real measure of success is how your money supports a meaningful, balanced, and fulfilling life. The Coffeehouse Investor achieves more than financial growth. He achieves freedom, confidence, and peace of mind. The next section concludes the book. It reinforces the simplicity, discipline, and principles that make investing and life rewarding. Conclusion: investing does not have to be complicated. Bill Schultheis concludes this book by reminding us that simplicity, patience, and discipline are the foundations of long-term success. The Coffeehouse approach is about building a portfolio that works quietly and reliably while you live your life. It is about focusing on what you can control and ignoring the noise that distracts most investors. The first key lesson is simplicity. Complex strategies, frequent trading, and constant monitoring often harm returns more than they help. A few broad-based, low-cost funds, allocated according to your goals, are sufficient to grow wealth steadily over time. Simplicity reduces stress, prevents mistakes, and allows you to focus on life rather than the market. The second lesson is patience. Time is the most powerful factor in building wealth. Even small, consistent investments grow exponentially when given years to compound. Patience allows you to resist the temptation to react to short-term market movements or chase fleeting trends. By trusting the process, you benefit from the natural growth of the market. Discipline is the third essential principle. Rebalancing your portfolio, staying consistent with contributions, and controlling emotions are all acts of discipline. These actions prevent common mistakes such as chasing performance, overtrading, or reacting to fear and greed. Discipline transforms a simple plan into a resilient and effective wealth-building system. Bill also reminds us that investing is a tool, not an end in itself. Its purpose is to support the life you want to live. Financial security, freedom, and peace of mind are the real rewards. A well-managed portfolio enables you to focus on relationships, personal growth, and meaningful experiences. Money becomes a servant, not a master. Another key takeaway is that the Coffeehouse philosophy extends beyond investing. Simplicity, patience, and discipline can improve other areas of life. Decisions become clearer. Stress diminishes. Confidence grows. By applying these principles consistently, you create a life that is not only financially secure, but also fulfilling and rich in experience. Finally, Bill encourages reflection and action. Success is not achieved by reading alone. It is achieved by applying the principles, making small, consistent contributions, and staying the course over decades. The journey may seem quiet and uneventful at times, but it is this very consistency that produces lasting results. Investing made simple is not about quick wins or clever tricks. It is about building habits, creating systems, and trusting the process. It is about living rich, stress-free, and with purpose. The Coffeehouse Investor does not react to the market. He prepares, plans, and patiently lets his wealth grow while he enjoys life. With these lessons, the path forward becomes clear. Invest with simplicity, act with discipline, and embrace patience. Let your investments work quietly in the background while you focus on living fully. This is the essence of the Coffeehouse Investor and the foundation for a life of security, freedom, and fulfillment. The final section provides practical tools and guidance. The appendix, Resources and Sample Portfolios, helps you implement the Coffeehouse approach, offering templates, suggestions, and examples to simplify your journey. Let us now explore these practical resources to turn principles into action. Appendix, Resources and Sample Portfolios. The appendix provides practical tools to help you implement the Coffeehouse philosophy. Bill Schultheis emphasizes that knowledge alone is not enough. Action and structure are essential. This section offers sample portfolios, guidance on fund selection, and tips for staying disciplined over time. First, consider sample portfolios based on risk tolerance. A conservative investor may allocate more to bonds and cash, with a smaller portion in stocks for growth. A balanced investor divides assets more evenly between stocks and bonds, with cash for flexibility. An aggressive investor emphasizes stocks for higher long-term growth, while still maintaining bonds for stability and cash for opportunities. Bill reminds us that these portfolios are templates, not prescriptions. Each individual must adjust allocations based on personal goals, timeline, and comfort with risk. The goal is to create a portfolio that is simple, low cost, and aligned with your objectives. Next, the appendix outlines recommended fund types. Low-cost index funds for domestic and international stocks provide broad market exposure. Bond funds covering government and corporate bonds offer stability and income. Cash or money market funds provide liquidity for emergencies and opportunities. Bill emphasizes that the combination of these funds, rather than trying to pick individual winners, produces the best long-term results. Practical tips for implementation are also included. Automate contributions to your chosen funds. Set a schedule for periodic rebalancing to maintain your target allocation. Keep costs low by avoiding high-fee funds and excessive trading. Maintain a long-term perspective and resist the urge to react to short-term market movements. The appendix also suggests resources for learning and staying informed. Books, websites, and financial tools can provide guidance, but should not replace your core plan. Remember, simplicity and discipline are more important than constant research or market timing. The Coffeehouse Investor uses resources to reinforce strategy, not to complicate it. Sample portfolios illustrate how to allocate across asset classes. For example, a balanced portfolio may include a total stock market index fund, an international stock index fund, a total bond market fund, and a money market fund. Percentages are adjusted according to risk tolerance. The key is broad diversification, simplicity, and alignment with personal goals. Bill also includes reminders for maintaining your portfolio over time. Revisit allocations annually. Adjust contributions as income and life circumstances change. Stay disciplined during market volatility. Avoid common mistakes such as chasing returns, timing the market, or overcomplicating your investments. By following these practical tools, you can turn the Coffeehouse philosophy into action. The appendix serves as a roadmap, making the process tangible and manageable. It bridges the gap between theory and practice, providing clear steps to build a portfolio that grows steadily while you focus on living your life. With these resources, you are equipped to implement simplicity, patience, and discipline in your investing journey. Your portfolio becomes a tool for freedom, security, and fulfillment. The Coffeehouse Investor is not a dream, but a practical approach to building wealth quietly, consistently, and stress-free. This concludes the Coffeehouse Investor. You now have the philosophy, the practical guidance, and the mindset to invest wisely, live richly, and stay calm no matter what the market does.